Hi everybody, Marco Carvalho here from businesscreditbuilders.org. Today's video we're going to talk about the cash flow fix known as the Flex line. This is a credit line product we're going to go over that may address some of the challenges you may face as a small business owner. Also, this particular credit line reports to Dun & Bradstreet, so this will help you build business credit. So let's get started. There are some challenges you may face, and we're going to go over a couple different types of businesses, and you may be one of them. So one of the challenges you may face is a seasonal inventory spike, upfront marketing costs, delayed customer payments. So how is the Flex line going to solve that problem for you? Is that this is a particular credit line that allows you to draw funds only when you need it for inventory or campaigns. Whereas if you get a traditional business loan, that's just a cash injection. Once you run out of money, then you need to go get another loan. This is revolving. This is draw only what you need. For traditional funding, if you're having a hard time getting maybe a traditional line of credit or a loan, this funding is in 24 hours, so it's really fast. The other thing is this repayment aligns with your revenue flow. So if you're a service-based small business, some other challenges you may face is payroll gaps in the off-season, unexpected equipment repairs, as well as hard to get traditional loans. Where the Flex line helps you is that, again, you can access funds anytime, repayments adjust with your cash flow in your business, and this is a revenue-based approval, so there's no hard credit pull you need to worry about. You don't have to worry about having perfect credit, and if you have revenue coming into your business, that's the main thing they look at when it comes to issuing you a Flex line. If you're in restaurants and food services, some challenges you may be facing is peak season inventory costs, staffing fluctuations, and unexpected expenses on your slow days. Where this helps you again is drawing funds exactly when you need it, and revenue is based on your seasonal sales. So obviously if you're in a seasonal business where business is really good, the payments fluctuate with that, whereas opposed to if you have a slow season, your payments adjust based on that. So you're able to always make your payments based on your incoming revenue coming in. You can use this for payroll, inventory, or even emergencies. If you're a retail and brick and mortar store, some challenges you may be facing is seasonal stock needs, renovation or remodeling services. Slow sales will impact your cash flow, so you need a solution such as this, is drawing funds exactly when you need it, repayment is your tied to sales, and best of all is your credit limits grow as your repayment history builds, and this benefits you no matter what business you are. Now, what I'd like to do is talk to you about a comparison, because you may be in the market looking at different types of funding options for you as a business. Should I get a revenue flex line? What about a merchant cash advance or a traditional business loan? Or if you run an online e-commerce business, what about a revenue-based funding product there? What I want to break down real quick is the funding speed is a big thing. If you're in need of cash right away, most people look at whether a merchant cash advance, that can be really fast. But the revenue flex line, the advantage for that is your decision is 1 hour and you can have funds in 24 hours. But the difference between that and a merchant cash advances look at your credit card sales, where with the revenue flex line, they're looking at your revenue coming in through your business bank account. Okay, so you may be having revenue coming in that's not credit card sales related. It may be through other ways of deposits. So that's another way you could qualify with a revenue flex line compared to a merchant cash advance. Obviously, you know, with merchant cash advances, those are lump sum fixed payments. With the revenue flex line, this is draw only when you need it. So you're not getting a loan or injection, and they're not deducting off your future credit card sales, which is a merchant cash advance. Now, you know, with a traditional bank loan, there's much more documentation needed. It's much more rigorous in their review to get you approved. Now, keep in mind, though, the revenue flex line is best for businesses that have good cash flow. You have cash flow coming in, but you need access to additional working capital. So you need that flexibility, and that's where the flex line comes in. With merchant cash advances, that's short-term emergency cash. Traditional bank loans are great for businesses that are well established. You have really good financials. And then with e-commerce, you can use platform sales, and it's based just on your platform sales with that e-commerce provider. This is not available for sole proprietorships. You do have to be an incorporated business. This is not available for startups. You have to be at least a year in business, and they want to see 3 months of banking activity. So if you switch banks during the year, that you have to make sure the bank that you're with now, you have at least 3 months of revenue activity for them to assess and approve you for a flex line. This does require revenue of $20,000 or more a month. So if you're below that revenue threshold, this particular flex line will not apply to you. You won't be able to get qualified. There's lots of benefits to this flex line, which I'd like to get into. Is the overview is $250,000 in working capital is what they go up to. You can apply online for this. The funding decision is really, really fast, and you can access your funds in 24 hours. They do give you an online dashboard, a dedicated account manager, and what's unique about this flex line is they also attach a business card to that. Another thing is there's no hard credit pull you have to worry about. They do a soft pull. There's no specific score requirements, no personal guarantee for this flex line, so you're not giving any type of ownership away as well. There's no equity ownership given. This is not a loan. This is a flex line. This is a purchase of your future receivables. Approval is based on revenue, not a fixed funding amount as a business loan, so this increases in real time. So as you're making repayments or your volume of your business is going up, your flex line is going to increase as well. This is really simple, it's fast and easy, and you can just have a decision in less than an hour. So what they're going to look at as far as going through approval is you have to be a US-based business. That's number one. Number two, you do have to be an entity, like I said earlier. Minimum is 1 year in business. You do have to have a separate business bank account. You can't use a personal checking account. At least 3 months of banking activity, and minimum $20,000 on monthly deposits, and your average daily balance is about $1,000. Now, if you do tend to come across negative bank balances throughout the month, you can't have more than 3 of those a month and not operate as your business. You can't be in the banking or lending industries. That's industries they're restricting to get this flex line, so you can't be in those industries. Now, how does it work? How do you apply for this? Because it's very simple. Once you go to revenuebusinesscard.com, that's going to take you to this particular website here, and you're going to fill out this form and click continue. When you go through the application process, they're going to ask you some basic company information. You're also going to need to connect your business bank account via Play. That's the only way they do underwriting. You can't upload bank statements. You do have to use that technology. Play allows read-only access, and that's how they do their underwriting. They're able to see your bank account data, how much deposit activity you have going in, your average daily balance. This allows them to assess how much of a flex line they want to approve you for. So once you're done doing that, connecting your bank account via Play, you'll have a decision in less than an hour. And when you're approved, then you can log into your revenue account, and then you can start drawing funds as needed. That's how simple this flex line is to help you fix your cash flow issues. If you need additional funding opportunities, I would recommend checking out our website, businesscreditbuilders.org. We do offer other funding products like business credit card funding. We also do revenue-based financing, loans, lines of credit. If you found this video helpful, give us a thumbs up and click subscribe. That way you're notified every single time we come out with a new video on funding opportunities, building business credit so you can maximize your funding potential. With that, make it a great day, and we'll talk to you real soon.